Boom, we are alive, ladies and gentlemen. It's good to be here today. Bitcoin had a wick as high as like 48 grand yesterday. That was amazing to see. That's what we're gonna go over. We had talked about, well, two primary things. Number one, I don't like intermediary market cycles. They're very unreliable, very slow. I much prefer the longer term accumulation cycles. But I think it brings up a few important factors. So here we are, boom. Bitcoin on the 6 hour. Now, one of the things we had kept talking about was the potential for distribution. And one of the other things that I talked about, and that's been on my screen every day, is this falling, this potential falling wedge. Now, I was actually leaning against this falling wedge being a bullish move. And again, what's interesting about trading ranges is you have like a falling wedge will lean into the trading range itself. And often what you'll see is you'll have an inverse head and shoulders that would function something like this as well, where you're getting a lot of, let's say, more traditional signals throughout the Wyckoff trading range, right? So I hadn't been online since like Wednesday, and one of the very last parts we pointed out, and on BitBoy's video too, is that this moment here, as we closed above the top of this falling wedge, and more importantly, above the point of control, which happened here at around 33.7 thousand, that was a pretty indicator that we'd go, a pretty big indicator that we would go north of 40K quite quickly. Now, we did mention this in BitBoy's video too, that if we broke above 33.7, we were going to rush to 40K real fast, that there's not a whole lot of resistance holding us back. Now, again, this last part of the trading range did look like it was turning into redistribution, hit what may be a low volume spring here. Again, we weren't able to close below this pink line, which had been the resistance lines going down on the primary part of the trading range. So I think a lot of the times that people should recognize is, well, twofold. Number one, if you're a fan of our work, you will know that we effectively think anything below a high is an area of accumulation, right? In all of our long-term strategies, everything I try to consistently repeat for everyone is that even if you buy the high, as long as you consistently measure out a price throughout time, you're getting a really good entry and you don't have to think a whole lot. One of the reasons why I dislike these shorter term time frames is because they're nowhere near as reliable in terms of, can we find a selling climax and a 700 or 800 day accumulation cycle? These are really powerful in terms of recognizing the bull market is coming. Whereas when we're in the intermediary cycle here, it's much more difficult. Now, we bounced right off the top of this. We moved above the point of control. And when we put what's even crazier here is when you put the wicks on, we had a wick all the way up to $48,000. Someone hit a market buy and a test here. And there's very little resistance at this point. So one of the things I think that's important is that when you guys are learning and you're studying, and I had a few people message me on Twitter and they're like, oh my God, I hope no one sold thinking that it was going to go lower. It's like every time the price goes lower, I've never said you should sell. As a matter of fact, my only consistent feature here has been, look, you should build an investor strategy. Most speculators do poorly unless they turn into investors. The way you become a good speculator is, well, venture capital, heads I win, tails I don't lose much. But in terms of Bitcoin, what I consider to be the collateral layer, every single month around the 11th to the 19th, I execute a buy. Now, that's a strategy I think is the most powerful for everyone that's in this sector. Right, there are ways to really play in the system. For instance, Fever, which is one we've been following and investing in for a little bit here, it jumped up 146% this last week. So if you're in the private group, you'll note I doubled down on my entries here with Fever. And we saw 146% gain, and actually even larger than the 146% gain. When we first started talking about it in our primary videos, we saw a growth of over 1,600% in just 7 days. Now, what's important here is that market cycles can be very blinding. It can be very difficult to feel like you're making the right decisions. The right decision is to accumulate assets that you think are interesting and basically never sell them. I cannot stress enough the importance of the books like Dan Dow and the book 100 Beggars. They really help refine the thesis that I've been talking about here for the last, at least I'd say 9 to 10 months. I call our Wu Wei thesis. How do I get the most amount of result for the least amount of effort? And when we show up and we're looking at charts, we can think that the result is of the chart that we expect on the daily. And that's not at all the case. Like, oh, yay, this big pump, like that changed my entire portfolio. No, it didn't. I'd still been executing my strategy. I have a huge chunk of my position that will manage the next 3 to 5 years of operating capital out, and it's going to stay that way. What I've gone back to doing is just my consistent entries, because the amount of room for upside, let's say 130,000, versus the amount of room for downside in this area, it's almost equivalent to some degree. So we've been relatively risk off, all of our portfolio, aside from some of these other ideas. Again, a consistent execution of Avalanche. I've been buying more because, well, first off, I have to round down my second buy, but I believe in the long term, this is the only strategy I've seen that works consistently for everybody without any fail. And when you want to buy, like, let's say you're going to go buy a vehicle, right? At least for me, because of where I live, Costa Rica, you got all these 4x4 hills and it's all nonsense off-road sometimes. You want to buy something that's as reliable as possible because I know I'm going to rag the shit out of the thing. So what do? We look for the most reliable strategy, knowing that the volatility is going to really drag the average individual along for the ride. And lo and behold, what was crazy here too, and then for those of you that were witnessing, again, this would bode into the thesis, is the day that we saw Bitcoin hit its spring, the S&P 500 decided to move into new all-time highs. There's a very real function in a format we've talked about here that in phase C we want to be careful, both for phase C for Bitcoin, which is where we thought we were in a redistribution potentially, and also where we were in phase C and phase D for the S&P 500, moving into new all-time highs for the S&P 500 and the NASDAQ at new all-time highs as of today. These are one of those indicators of the only up sentiment we've talked about. And effectively, what I would like to reiterate is when you look at our thesis on Bitcoin in general, it is an accumulate only strategy, and then remove principal or capital when you need to function as a business or as an individual for whatever your regular budget should be. I think that's a very strong strategy. You should generally have an accumulation strategy for the next 40 years of your life. Let's say you're 30, you should be in accumulation mode until you're 60 or 70 pretty easily, right? Yes, you should enjoy your life along the way. You should play with whatever fun you have, that comes. I'm going to buy a new kind of luxury 4x4 and do a road trip around Costa Rica here. Not besides the point. But when we're looking at these small time frames, it can be very disconcerting. You think, oh, well, look, Tio got it wrong. It didn't turn into a distribution right here. Well, great. This is actually more data. It allows us to learn something. Well, we actually got it right in terms of the falling wedge. I was just more heavily primed towards a down cycle of 23 before moving up. But even still, the thesis had remained the same. Wait for the particular time of the month when the budget executes and accumulate more. Even though the price has changed, the strategy has not. And I really wanted to lay that out because there's a few messages of Twitter. People are like, oh, what are you doing? Short? I was like, well, that's not the game we play. I mean, you can, if that is the game you play, then you should be doing something differently, or you should follow your own strategy. Here, this is an accumulation strategy, and it is an accumulation strategy based off the potential of the trading ranges. Now, again, when we had this nice 700 to 800 day accumulation range, this was like, these are the best prices to get in, whether it was Ethereum, whether it was Bitcoin. You had all this time, what are you talking about, selling climax to LPS, over 600, 800 days almost before we saw a real bull market cycle. And my opinion is that you should pretty much always be accumulating, because there's 800 days where you would have been bored down here not doing anything. And the problem is most people don't show up here when we're making our primary entries, right? They show up late and then get upset about a price movement like that fluctuates in the mid of the market. I really don't care about the mid of the market. What I'm solely interested in identifying is, are we at the beginning of the market cycle and are we at the end? Now, I talked about the idea that I didn't think we were at the end of the market cycle. Now, look, stuff like this doesn't look healthy. How Ethereum is sitting right now, it looks like a giant freaking hypodermic top, right? Same with Bitcoin. It looks like a giant freaking head and shoulders. But that doesn't mean that the market cycle was over. And we had talked about this too, that what my assertion is that from that day, we would probably see around 200 days of market cycle sideways before we saw a continuation. And or it would be over. And it was very unlikely that the market cycle would be over, considering that it took 1,200 days of accumulation to start this new cycle. Now, this intermediary movement of around 200 days seemed very likely. And we're approximately 75 days into this. We're about halfway through that 150 to 250 day cycle time. So I feel very confident about the thesis. Again, for anyone that's overweight in a position, this is not Bitcoin back at $3,000 to $5,000 to $6,000 to $9,000 to $12,000, right? This is Bitcoin in the middle of a market cycle. I'm not creating all of a sudden a huge risk on game because we've gone upwards. I'm continuing to execute the accumulation strategy because I know that through time the results work the most effective. And then what I spend the rest of my time doing is looking for crazy fun shit like Fever that has that asymmetric upside in a very early on venture capital play, and allowing the love of our collateral layer to do us really well. So I just thought it was interesting to go over. No matter what the price does, the thesis stays the same. If you're interested in an asset, it's pretty much always game on for accumulation. We've gone over this with the S&P 500 and the other big indexes. Much slower ideas, especially in the venture capital sector. Look, if you go back to our videos between October, November, December, when we were talking about why we thought Avalanche was such a great buy at $3, even though the price has dropped dramatically since its top, our original entries have done still extraordinarily well. And at the high, we had done like 33,000 or 3,300%, right? It was fantastic. Even from the mid entry point, you're talking over a 10x quite quickly. So the asymmetry in the market is your friend, and it's best looked at as a function of volatility through time, not like, I'm going to get the price exactly right. As a matter of fact, more often than not, we're basing our entire game plan, all the time, not more often than not. More often than not, you'd be surprised that works, I guess is what it is that just buying and accumulating on whatever consistent basis you can and ignoring the price does extraordinarily well. And when we're using these trading ranges to learn, like I said, I hate these intermediary markets because they're just nowhere near as reliable as the long-term time frames. And secondarily, they're not that important to me. We left the really fun area of accumulation for things like Ethereum and Bitcoin back when Ethereum was $200 to $400. These were our last favorite entries to make. Everything up here, the risk profile is not as tasty. So I'm just going to be significantly more relaxed with the next parts of the market cycle because it's basically still right in the middle. Anyways, it's nice to see that we see I'm actually really impressed to see so much strength, 34% bounce out of Ethereum right here. That's great to see. We could be building a new floor here. Now again, I don't know if that's the floor of the next bear market. That's for dang sure. But again, the strategy is most of the risk has been removed off the table because the next 3 to 5 years are kind of set. I'm just functioning on a day over day, month over month accumulation strategy now because the profile of risk here is basically right in the middle, both directions. It's not Bitcoin at $3,000. It's not Ethereum at $400 anymore. So I just focus on a month over month accumulation strategy. Now, if it was Ethereum back at $400 again, I'd be opening longs like we were. As longs are no longer open. Those have been closed out and removed to a less risky position of just spot holding effectively. So anyways, what was the point I wanted to get across? Oh yeah, be patient with yourself during the learning process. Happy to see this bounce up again. This wick was absolutely insanity. I was watching that wick on my screen yesterday going, wow, dang, that's impressive to see. But again, as soon as we broke over that point of control, we had talked about this potential in the falling wedge, the point of control, here it was, and then bang, it snapped up real fast. So this is again how quickly that this was a possibility, and this was a possibility, and this is the possibility that we got, and it changed very quickly. Right, this is the downside. It wasn't a guarantee that we were going lower unless we couldn't get above the POC, and then we'd come lower. But lo and behold, we got above the POC and then jacked up real fast. So this last moment was hyper important, right? Anyways, thought that was fun. I hope you guys are all enjoying that ride. I'm gonna leave it pretty simple today. Thank you for joining us on the channel. Probably just gonna go over a few few thoughts and questions. And yeah, we'll chat from there. Someone says there's something stuck in my hair. It's probably my hair. Nice, smash that like, guys. Yeah, smash that like button. Yeah, so again, you know, guys, these trading ranges, it did turn into what appears to be an accumulation, like a type of reaccumulation or accumulation range. Let's see where are the falling wedges we have here. I know there's a few. I think it's the spotting the trade in the wild here that we did. I'll have to double check. Yeah, I believe that we have, I wanted to go, let's see, pop these open in the background and take a look. Okay, here we go. Yeah, so there are areas of accumulation that we had talked about in our private group. Yeah, so this is the accumulation of a trading range, a descending or a falling wedge. This is one of the potentials that we had thought it could turn into. And we saw that sign of weakness in that phase C, and very quickly, as soon as it closed above phase D, it closed above the falling wedge here. This is the schematic that we're looking at as a potential. It did move up quite quickly. So it's very likely that we almost instantly reversed as soon as we got above that falling wedge moment, right? And that was the kicker we were looking for too. I was like, this is what will invalidate this is what would invalidate Glasswalker's chart. Now, I was leaning into it being redistribution with Glasswalker just because it looked so beautiful. This last little bit of sign of weakness here, but again, it stayed really, really solidly within our falling wedge potential. And then as soon as it moved above this point of control, it kind of went ballistic. So it does look like we've affirmed that. If we see it, we'll get a nice kind of backup phase here above 39,000 would be great. And then, yeah, we could continue this bull market quite quickly. But we're going to have to wait and see. It is very strongly the likelihood of a reaccumulation with a low volume spring in a falling wedge now. So that was cool. It was nice to see. Again, I was definitely looked like it could have been a redistribution point, except for when we turned around. We turned around right at the bottom of the part of this wedge here. We hit some very serious resistance and on support, and then we moved right back above the point of control and jumped really quickly. So I think that, again, understanding the function of these accumulation and trading ranges is so important, because they can appear to switch very quickly, right? Just like we had been going over. Do I have Glasswalker's chart here? No. Just how we are going over with Glasswalker's chart, you can see these accumulation and redistribution ranges. They have so many similarities up until phase D is done. And that's why it's almost never a good decision to make an idea into phase D, unless you know unless you're following my thesis, which is basically, hey, we're in a long-term game of accumulation. If you look back in all of Bitcoin's price history, effectively over time it has only gone up. So even if you buy the all-time high, as long as you consistently execute a strategy on a month-over-month basis, you will be successful as an investor. And again, our goal here is to help everyone recognize that you don't need to be extraordinarily good at getting whether it's going to go up or down here right. We're just trying to get better at it, first and foremost. Again, remember, we don't like these short-term time frames. We much prefer the longer, broader spectrum accumulation ranges. They're just significantly more reliable. So when we're down here, we can expect that our likelihood of getting it actually wrong is significantly higher than when we have 1,200 days worth of data. Anyways, hopefully you guys found that helpful. Thank you all for joining us. Give us a thumbs up if you like this content. Probably should have gone live with you guys on Friday or something just to be there, but was busy. Didn't want to make too much noise for no particular reason. So thank you all for joining us. We will be back again. DJ Bad Ash, nice to see you. Love the name there. AX in the house as well. Oh, good. Look at all you wonderful folks and Bear family out here. I like that. Kipley says, is there any danger to sitting in Tether right now? I don't use Tether. I like USDC, so maybe there's an underlying danger to USDT. Elliot says, Tios, would you say now is a good time to accumulate Avalanche? Yeah, again, guys, I think the best strategy is to ignore price and just focus on consistent monthly buys. So anything that you're interested in, I think you should fit it to that you should, not financial advice, but you should fit it to that strategy. It definitely seems to work out the most effective. So we'll go from there. Perp token metrics shill? I have no idea what that is. We don't use token metrics. Could you focus on ETH and have boosted Bitcoin in some way? Could more? Again, you know, what's fun is that there's a lot of money on the sidelines looking to play. We're witnessing the growth of a sector that's very, very powerful. Then there's no such thing as market manipulation. Like, anyone who says market manipulation just doesn't understand how the markets work. If you have enough money, you can manipulate the market. That's just called buying and selling. And what it is someone has more money than you, so you think they're manipulating it. But that's just how buying and selling works. So it's not market manipulation. It's just a core function of literally how markets work. I'm always surprised people say that. ATO, now that Tether is possibly being sued by bank fraud, what do you think this means for crypto? I'm not sure. I haven't seen that news yet. And again, we use USDC. Can you show me how to withdraw money from Crypto Christ? I have no idea what Crypto Christ is. How does a low volume spring work? You end up seeing a spring on a very low supply signature. And again, these intermediary markets, that's just for that reason. I'm not as big a fan of them. I try to be more patient with them, but you can definitely see why as well. They're nowhere near as reliable. So the strategy is what we function on. If Amazon adopts Bitcoin, will it be a game changer? Not necessarily. Just them accepting it is not a huge deal. It'll be interesting to see if they figure out how to use it. Morgan says, hi from Australia. Rather than hodl, I keep hearing people say sell at the top and buy at the bottom. Again, my function here is when we see overzealous highs, I take out multiple years of operating capital and then I walk away, so I don't care. The difficult part is that if you do sell, you often don't buy back in. That's happened so many times to so many different people. So it's not always great selling your position. You might want to just hold your assets and do better long term. ZD says, Tia, what platform do you use for dollar cost averaging? Logging to Binance manually. There's a bunch of ways to go about that. I know like a Digifox has a bi-monthly crypto function within their platform as well that will automatically take money from a bank account, I believe. You have to double check on that one. Everyone's different depending on the jurisdiction that you live in, depending even on the state or the country that you obviously live in. There's a huge difference as well. So there's no easy answer to that. I'm a huge fan of FTX. It's my favorite platform, but for United States citizens, it's not readily available to you guys, so that doesn't help you much. Elliot says, thanks to you. I love your channel and listening to Dan Dow Investor on your recommendation. Great so far, really enjoying. I love that. One of my favorite books. Santander says, isn't a low volume spring less reliable? Again, what's less reliable is the depth of the time frame here. We know we just had a 1,200-day market cycle accumulation to get to this point. So when we're in the middle of it, anything above or below is not as valuable as the first entries we were making in the early days, because those are basically risk-free. Here, you don't have a risk-free scenario. We could end up back down this low in the next market cycle. So it's not necessarily the easiest way to say. Like it, again, one of the things I dislike about the intermediate market cycle is unreliable in terms of technical analysis to some degree or another. Other than, again, I've remained confident that we were going higher, but that accumulation cycle I figured was about 200 days. We're about 70 to 80 days into it, so another 30 to 40 days, we're getting pretty damn close to that thought process. DJ Badass says, what do you think of these YouTubers shilling Amazon going to use Algorand or AMP? Well, I do know that Algorand has some really interesting technology in terms of a stable coin. And it does seem likely that Amazon would be interested in their own stablecoin. If I were them, I would be. If I were a PayPal or an Amazon, I would be looking at, wait, how the fuck do I get a USD Amazon token? And how do I make it start earning yield? And then give my Amazon Prime customers little bank accounts that they could save their Amazon US dollar Amazon token in instead of a regular bank account. So I don't think that they would be too interested in adopting Bitcoin so much as they would be in adopting like a stable Amazon coin, and Algorand could be a functioning protocol layer for them for that. Comment about Axes. Yeah, NFTs are a deal, a thing apparently. Chris, can this be a relief rally before the bear market? Oh yeah, I mean, look, again, we're still within the trading range. We want to see clear above and below trading range changes. And again, no, the price will not change by function right now. Whether we go higher or lower because of where we are in the market cycle, the thesis is staying the same. I'm not going to adjust that thesis just because the price is changing. We're in the middle of the market. I'm going to consistently go with that sentiment because that way, no matter what happens, I was right. I'm old enough to be patient to play this game now. I don't need to win it like tomorrow. I'm happy. I'm set. I got good things that are going on over here. Like, it's no big deal, whatever the market does. I'm always happy when it goes lower because then I get a better entry, and I'm always happy when it goes higher because then, hey, the portfolio is worth a lot more. Either way, things are good. Anyways, Tio the Arcane Bear, thank you for joining us today. I appreciate you guys. We'll see you again on the next episode. Try to make more videos. Again, it's super hard. I get busy doing other things like reading, and then I'm like, yeah, whatever. I'm like, the market's gonna do what it's gonna do. Like, I don't need to make a video every day. I'm like, oh my God, the market is changing again. Like, that's just noise. My goal here is to continue to educate myself, repeat the mantra of the thesis, show that the thesis works over time, and just keep repeating the executable things that I can to make that thesis pay the most for the least amount of effort. It's Tio the Arcane Bear. Oh.